Audio morning brief for the U.S. stock market, 7 a.m. Eastern Time, April 8th. I'm Rich Posse for Critical Point. Decided to do an audio this morning, even though in the future I intend to do more, try to keep more of like daily videos here to keep up with these markets better and explain things better. But today, not expecting much out of the stock market. It looks like a level 4 top and level 4 bottom are due. That may mean they're going to cancel out, not do a lot. And keep in mind, Mondays and Fridays, we lack market participants. Not everybody trades and works. And so tonight into tomorrow is when they will get everybody back online, back to work, and maybe we'll have better clues by tomorrow. What do they want to do this week? Again, as of this morning, looks a little bit shaky of trying to forecast which way they'll swing. It can go either way, if not both, meaning some choppy action. Now, the interest rates are easing higher or pushing higher overnight. That's eased the futures in the stock market off a little bit, but they kind of act like they'd like to not get excited over interest rates, and I don't think they will unless interest rates actually surge. Now, today is Eclipse Day, and there are market participants who trade astronomical factors, just as they trade a variety of other things in life, and whether it's raining in Chicago and sunny in New York and things like that. But this eclipse, of course, is one of the more important of those events. There are even people on Wall Street and not on Wall Street forecasting this can be a significant change on a long-term to very long-term basis, something for the better, supposedly. So this may impact some like day trading, computerized trading right at the moment here. So keep an eye on interest rates. I'm not so sure. We got a lot of news coming in on the economy side. Geopolitically, if the market's going down, I think it might actually be more geopolitics, especially if the market goes down and the interest rates don't really surge or anything like that. Geopolitics is really on the top of their list now. And it's probably going to be coming and going all year, but we've been warned by Wall Street. They think that's the bigger driver, not necessarily for something negative, not say from the economy or business. Okay, so we got to keep an eye on the geopolitical thing. It feels like overnight they thought things were okay in the Middle East, Russia, Ukraine, China, U.S., Taiwan, those kind of events here. But there's a lot going on. The government's quite busy. Dealing in some of these geopolitical events. All right, now we also have to consider last Friday's jobs report was better than actually what I thought, and I thought it was fantastic, but now it's like there's people out there saying you can't get any better than this. This is perfection. And what I've been warning you on my PMIs, that I've been saying we're in a sweet spot here. And I've been talking out in public wherever I can, saying it looks like some of these GDP and economic metrics we're looking at could be in a sweet spot. So I think this economy is going to continue to rock and roll to the positive. 2 thumbs up. So to me, we're still in a bull market. Lots of upside here in the stock market. But we do have to consider there's got to be setbacks along the way. And I think the trade is increasingly saying this has been too rich of a run-up from October of last year to now. There ought to be more setbacks. There ought to be some consolidation. And yet, I think basically Wall Street's saying, hey, give up on recession fears, give up on any kind of fear over the economy, inflation, interest rates. You just got to go with the fact that the businesses are making money. These stocks are worth more money. But on a very short-term basis, they can still revisit some of those things. And then with that could knock the stock market down, that is. And then we have to consider, some of the geopolitical stuff that's apparently at the top of the watch list this year for negative factors for the stock market. All right, so if we see the stocks trending lower today, we must consider there's still a gap, tiny little gap, 51.54, and yes, it can go down into the 51.20s, 51.30s, okay? Meanwhile, and what may be a clue it wants to do that is it trades below 5188.88, you might have a better level at 5183.49. If it trades above 5221.97, there's an opportunity to revisit, say, the 5240s on up to a new record high. Now, what about the patterns, the business cycles, the model? Well, the model's saying it's getting awfully late for a level 3 bottom. Something may be wrong. They may want to be bearish this week after all, then bullish next week. But when we zoom out for those larger trends, we still want to be bullish to very bullish into May, okay? And then that can tuck inside of still larger trends perhaps when the market's up all year long, or at least into September. As we get back to the short term, what we find is that the model is saying it's possible we had it right, that there was a level 3 bottom back on March 26th or something like that. Might have been a little sooner. And then the breakdown on April 2nd was a warning, a clue, an indication of a brand new level 3 downtrend. But it's very choppy, sloppy. They couldn't make their minds up at times, even though they were quite serious at trying to accomplish something. And then we get the jobs report that acts like if it was a level 3 downtrend, a brand new one, then that jobs report kind of created a disruption, may have destroyed it. It's possible it even changed the market's mind so that it put a bottom in last Thursday on the cash, Thursday, Friday in the futures for late level 3. And that's the best forecast the model's going with, because it's respecting the fundamentals, the news, as well as the technicals, and saying even though it was a late bottom last week, it can work and you got such good news. And the market should go higher this week. All right, and maybe even next. And again, it should fit inside that larger up move for this month and on into May. But we can't rule out the market may change its mind next few days, especially if interest rates were to surge. More so if we have geopolitical events or both occurring at the same time. We may learn this has to set back some more in the stock market this week before moving higher. One way or the other, though, we'll clean that up, we'll get on board, and they're going to move this higher into May. It's just a matter, does it go lower one more time maybe this week, then higher, or are we on our way higher? Current best forecast this morning, we're on our way higher into May. Past results and honest indicative future results. In terms of interest rates, it's due for a top, it's due for a setback, but no sign of it this morning, and the rates are working higher this morning. Now, as we go to Bitcoin, can consolidate for a while, but probably going higher later this year. Still in a long-term bull market. Same for gold, same for crude oil. I see limited upside in crude oil, but crude oil is bothering the stock market a little bit now, as is the dollar a little bit. But it's really, again, the interest rates, and the gold's even bothering the stock market a little bit, but it's really more of the interest rates and geopolitical event, and what they're doing is just interrelating all these other factors that may bother them. Any rate, don't be surprised some downside, but at least for today, for these level 4s, don't be surprised the market doesn't want to do much of anything. Get the eclipse over with and get people back to work, all of them trading tonight or at least tomorrow, to get the true working week going on Wall Street. Have a great day. Past results not necessarily indicative future results. Thank you.